If you think cryptocurrencies are a scam, you probably do not know anything about banks. So, in this video, we will look at 5 truths about money that banks do not want you to know, since if everyone knew them, the banking system would collapse. Henry Ford said, "It is well enough that the people of the nation do not understand our banking and monetary system, because if they did, I believe there would be a revolution before tomorrow morning." So, if you are ready, give this video a thumbs up, and let's jump on to the main content for which you are here for. Number 1. Keeping money in a bank is a scam. Let me ask you a question. How much interest would you get on your funds if you deposited them in a bank? At a first glance, it appears like at least a few percent is required for it to make sense, correct? However, when you look at the numbers, it is clear that this is not the case. The top banks, such as Citibank, give less than 0.5%. There are banks that provide greater rates, but they are still less than 1%, especially because interest rates are currently at their lowest. Consider this, while inflation is 2.5%, your money rises by 0.5%. The intrinsic value of your wealth is declining year after year. You would be significantly better off spending that money now rather than putting it in a bank. Your money's purchasing power will be substantially less in a few years than it is now. When inflation is rising, as it is now, asset prices such as homes and stocks grow tremendously. As we have witnessed in the previous year or two, a bank is a place to keep your money, not to make it. Number 2. Banks create money from thin air. If I told you that banks produce money, you probably would not believe me, because the only bank allowed to do so is the Fed. It is the source of the dollar and the sole entity with access to the printing press. However, the banking system is designed in such a manner that every bank in the country, if not the world, is permitted to generate money to a certain extent, dependent on the amount of money deposited in that bank. Assume you deposited $1,000 in a bank. What do you believe the bank will do with that money? There is no use in retaining it since they would not be able to pay you your miserable 0.5%. So, the bank lends your money to someone else who wants to buy a vehicle or a house and collect interest, which is usually much larger than 0.5% it pays you. The average credit card interest rate is 20%. That is dozens of times more than the bank will pay you. The point is that the bank will not inform you who it will lend your money to. When you check your account, the bank will show you that your money is still there and that you may withdraw it whenever you want. Therefore, if your money is still there in the bank, where did the money go to lend to someone else? This is referred to as fractional reserve banking. Banks are only permitted to keep 10% of deposits and lend the rest. For every $1,000 you deposit in a bank, the bank creates another $900 and lends it to someone else, bringing the total of $1,900. The bank made $900 appear out of thin air. It is not as difficult as you may imagine because the computer only has digits. Are you enjoying the video so far? Hit that like button and subscribe if you haven't already. That will surely help us a lot. Number 3. You can make money by borrowing from banks and investing elsewhere. Mark Zuckerberg used a 30-year-old mortgage to finance his $6 million Palo Alto house, which is 3 miles from Facebook's offices. He was 28 years old and the world's 40th wealthiest person at the time, valued an estimated $15.6 billion. Why would you go into debt if you have billions of cash and can easily pay it? He could easily buy a dozen $6 million homes in cash without blinking an eye. So, why take out a mortgage? The solution is free money. I recognize that it sounds ridiculous. When you are already a billionaire, who would give you free money? I mean, unless it is for charity, why would somebody give someone else free money? It all comes down to interest rates. Remember how we discussed banks providing such a low ROI that is not worth keeping your money there because it does not even beat inflation? Thus, you are losing money? In this case, though, it is the opposite way around. In the United States, the inflation rate is 2.5 to 3%. Hence, any money borrowed that is less than the inflation rate is termed free money. Zuckerberg's mortgage rate was somewhat more than 1.05%. If you do the math, the bank loses because the mortgage rate is lower than the inflation rate. To do the math, you do not have to be a genius. As an example, suppose you borrow $1 million at a 1.05% interest rate. Before the pandemic, the average rate of return on a savings account was 2.4%. Now, it is less than 1%, but let us remain with 2.4%. That is to say, even if you deposit that $1 million in another bank, you will earn $24,000 a year while only paying a monthly payment of $10,500 at 1.05% interest to the bank that lent you the money. Imagine doing that with $100 million or $1 billion. There is no point in tying up your own money when you can utilize it for more profitable purposes when you can borrow for free. Of course, when dealing with tiny sums of money, this may not make sense because the difference is not that significant. When it comes to significant quantities, however, betting around 1%, 2%, or 5% might imply tens of thousands, if not hundreds of thousands of dollars. Number 4. The richer you are, the lower the rate you are charged. Remember that banks are not charitable institutions, but rather corporations like any other with the goal of maximizing profit. They have shareholders to whom they must answer, and if their business model is not successful, they will not survive, which is why they would rather lend money to a rich guy than to a poor guy. When you are a billionaire, for example, the bank can rest easy because no one is concerned that you will default on your loan. And if something happens, if you cannot make your monthly payments, you can easily sell a portion of your business to pay back your mortgage, making lending money to you almost risk-free. In fact, that is how the banking system evolved over the centuries, with banks only working with aristocrats or those with money or assets that create consistent income, such as land. When compared to the average employee who may become ill, be unable to work, or just lose his job, if you are barely making ends meet by lending you money is incredibly risky. I realize it is simple to blame banks for this, but think about it. Would you feel comfortable lending money to a friend who makes very little money or to a friend who owns a business? Probably the latter, regardless of how harsh it seems. So, if you want a lower mortgage rate, a lower credit card rate, or just better terms when borrowing money, you must first improve your financial situation. Banks also give such low mortgage rates to build good relationships with wealthy people so that when they need a larger loan, they will come to them. It is a win-win situation for everyone. Blockchain and cryptocurrencies promise to change that and democratize banking, and they most likely will to some extent. In fact, banking has become so democratized that everyone now has access to financial services. Compare that to a century ago. Number 5. Credit cards can bankrupt you. 70% of Americans who have credit card debt admit they will not be able to pay it off this year. Consider what that means for a second. Your credit card debt is not the same as your mortgage. It is not 3.5% per year. It is probably over 20%. If you cannot pay your credit card bill on time now, what makes you think you will be able to pay it a few months later when it is considerably larger? In other words, 70% of Americans are on the verge of being bankrupt. More than half of those surveyed, 56%, claim they have held credit card debt for at least a year, and the majority will continue to carry it for many years to come. Almost 20% believe it will take them more than 3 years to pay off their debt, while roughly 8% are unsure when they will be able to do so. And that is how banks normally make their money, because most individuals spend without considering how they will pay it back. They are accustomed to a certain way of living and are willing to maintain it even if they cannot afford it. That is why banks constantly contacting you to try to sell you a new credit card. Do not get me wrong, using credit cards responsibly is fantastic for improving your credit score. But if you're not financially responsible, you should avoid getting into debt. If you like this video, you would probably love our other videos on finance that I have left here in the description below. Make sure to subscribe to us See you on our next video.